The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, to take a look at the market trade action from Tuesday, kind of a mixed bag in the grains and oil seeds. Talk of tariffs on Canada, Mexico, and China from President-elect Donald Trump maybe having a bit of an impact. Meantime, in the livestock, more support in feeder cattle amid this Mexican New World screwworm issue. Outside markets fairly quiet. Are we already getting into the holiday malaise, so to speak? Let's talk about it. Joining us for a conversation, Matt Bennett with agmarket.net. He is mobile today. Appreciate you taking a few minutes to chat with us here, Matt. Hope all is well.
Yeah, everything's good, buddy. It's we're getting ready for Thanksgiving, so going to have everyone in the house and quite a few joining in. So got to make two big birds on Thursday. So kind of looking forward to all that.
I was going to say, birds, are you doing the turducken like John Madden would do or
No,
not so much?
We're just doing a couple of big turkeys. So one I'm in the oven, and we're going to do one in the smoker. So I got to make sure my smoked turkey's better than my wife's turkey out of the oven.
Well, in that case, I will be on my way over to the Bennett household for Thanksgiving. It sounds like a good time.
Yep. You're invited.
Well, I appreciate that. I appreciate that. Likewise, you would be able to come to our house anytime. All right, let's talk about these markets. And I think just to start in grains and oil seeds, I know the tariff talk out there kind of was a headline driver early. And it felt like that maybe faded a little bit into more holiday malaise type of trade. I mean, what's your thoughts on what we're seeing in the grains and oil seeds here ahead of the Thanksgiving holiday, Matt?
Yeah, I mean, obviously beans were getting worked over there for a while. They kind of came back, and corn settled off the lows anyway. But, essentially the tariff talk, that's not necessarily something people weren't expecting. I think we all know that tariffs were going to be a part of the discussion. It's just certainly something to trade, especially at a time when your volume is going to be down a little bit. Because let's face it, a lot of people aren't working this week. So typically Thanksgiving week, you're off just a little bit. Volume's still okay today, but it's not what it is on a normal week. So I don't know. When you look at these markets, tariffs certainly would make an impact. There's no doubt about it. But talking about tariffs and implementing tariffs are two different things. So, we'll just have to kind of see how it plays out. You saw the spreads, finally start to weaken a little bit in corn. You've got to think that decent March, decent July, all the way down the board, you've got to think that you're going to see some of those weaken at some point, and that you're going to see more carry in the market. I mean, huge crop. When's the last time we had an all-time record yield with huge stocks and saw tight spreads? It's really been quite an interesting thing. So with first notice day there on Friday, I've got to think spreads continue to weaken.
Yeah, I haven't looked at the spread since this morning, but I think it was an 8.25 carry, Decent March corn as of this morning. And you bring up first notice day, having that happen on the day after Thanksgiving on what's going to be a shortened session. I just have to think, that's going to lend itself to some volatility. What should folks be thinking about here? Any sort of pre-positioning ahead of this, or should they just let it ride out and then wait till after first notice day? Your thoughts there, Matt?
Yeah, as far as, if you're trading, of course, it's a completely different mindset. I try to focus more on the grower than anything. And we know that a lot of these growers have been trying to figure out, hey, do I go ahead and reward the market? We've been sitting here with pretty darn good basis appreciation off the lows. We've seen the markets come well off the lows. And for some people, your flat cash price movement has been upwards of 60 cents. And so, if I'm thinking about anything from the producer's mindset, I'm thinking, reward the market when it offers you the opportunity to reward it. But as far as a trader's mindset, if a person has a lot of risk at stake, Friday could be a day that you don't necessarily want that to be the case, because sometimes in very low volume trade, you can get some wild moves. And we've got a lot of pent up, like I said, spread activity where, if you would have told us, 3 months ago that we were going to end with a 182 crop, and or 183 crop. I mean, right now you're 183. I think we might be trading something a little under that. But if you'd have told me that with stocks of 195 and that you're going to see Dees March down here at 7 and 8 cents here right before Thanksgiving, we would all thought you were nuts. And so that's exactly what's happened, though. And so you've got to think that if you start unwinding this spread and people get forced to puke those long D's positions, that you could see spreads really get wacky over the next few days.
Well, I know too. Dees corn looking like here at the close, breaking below our current support. So one has to wonder: does that open us up to some more downside, or some farmer selling, adding in here, things of that nature? So it'll be interesting to watch that. A little more on soybeans. Meal and oil, the products have really been the driver in that market, it feels like, here the last 2 weeks, I would say. What's your thoughts on some of those moves? Here we got bean oil up triple digits again on Tuesday. So, I mean, your thoughts in the products driving the soy market right now?
Well, with bean oil, I mean, whenever you had California come out and say, hey, we only want 20% of oil, seed oil is what they're calling it, and so really any sort of a vegetable oil kind of took it on the chin once they said that. That was the formulation in the renewable diesel. And so, now you're seeing a little bit of a stabilization. And I think a lot of the reason that the bean market was able to kind of come back is that bean oil was able to kind of pick itself up off the mat, if you will. And so obviously bean meal has been just extremely cheap. And so, we've gotten down here recently to some of the COVID lows. And so you've got to think that soybean meal market should have the opportunity for some sort of price appreciation. If you get, if you get out past, I guess, the excessive selling that we've seen here. But I don't know. I think meal, in my opinion, is probably a bargain whenever I look here. I'm not saying I'm bullish, but I think if I was an end user and I here in the last few days turned my nose up at 285, 290 bean meal, I kind of feel like that's a potential big mistake. So no doubt products are a big driver of the bean price. And the last thing I'll say on this is that it was interesting seeing bean meal really hurt at the time that we were talking about southern Brazil and Argentine dryness. Now that you've got Argentina basically in a better situation as far as they had some rain this week, and typically when you see weather issues in Argentina, of course the bean meal market rallies. Well, bean meal market did not rally when they were talking that way, and now you're looking at a better situation from a weather standpoint, and we haven't totally fallen apart. So I think that's a good sign.
Matt Bennett with agmarket.net is our guest analyst here today on the show. Matt, wheat, cotton, both those markets finding some green on Tuesday. I have to wonder, this dollar's been super high. That with the tariff talk, maybe with China, for instance, just this global wheat picture. You throw cotton in there too. I mean, those markets maybe a little more impacted by the tariff talk and the dollar moves and things of that nature. Would you agree? What's your thoughts over there?
No, I agree. I think any of these commodities have really struggled, when you get the dollar clear up at multi-year highs, and so dollar finally backs off just a little bit. And of course, you're going to get, just some of your commodities, a little bit of a breath of relief. Now, wheat market's been awfully hard to gauge. Of course, there's some more premium in there at times, but, we've taken it out just as quickly as what we've gotten it back. And so a little bit of green on the screen obviously makes you feel better. But in my opinion, you're going to have trade tomorrow. And then, of course, Friday's a shortened day. I'd be a little bit concerned if I had much risk there because, this wheat market is very reactive again to news out of the Black Sea. So, yeah, absolutely. Commodities are going to be able to get some sort of a support as the dollar really moves lower. And conversely, we saw that happen whenever the dollar was high. It really hurt our commodity markets.
I want to shift over to livestock and let's talk in cattle. Feeders, another strong day again on Tuesday. We had a huge spike Monday on this New World Screwworm news out of Mexico. USDA suspending the imports of feeders, bison as well from Mexico after this animal was found with New World Screwworm. I think about the impact of this in the feeder cattle market specifically, Matt. I mean, roughly like 30,000 head of feeders per week flow north from Mexico into the U.S. So potential impacts here, and then maybe too some of the tariff talk spilling in as well. But I just wonder, could this cause this feeder cattle market to shoot higher here and give us a bunch of bullish momentum? What do you think?
Yeah, there's no doubt about it. I mean, you look at cattle, obviously, cattle on feed placements last week were anything but bullish. Most people expected some bearish numbers, but you start pulling the Mexican cattle from coming north of the border, it's going to make things significantly different as far as cattle on feed and replacements, depending on how long or on placements, depending on how long this kind of plays out. But cattle market, as you know, as far as the cash side, feeders aren't cheap out in the real world. I mean, people are paying a fortune for them. I've heard about 400 pounders in Nebraska bringing $1,700 and more. I mean, clearly that's over $4 a pound. It's just an insane number. And so who knows what's going to happen the longer that this plays out. So I've got to think that as far as feeders are concerned, it's certainly friendly. Fats have been more reluctant to join in. I feel like the funds are still a bit hesitant to push their long in fats. I think they feel like without outside help, it's just going to be tough to get anywhere near those old highs we made a year ago. But at the same time, we've still got awfully good prices. So what I've been telling people, whether it's fats or feeders, I'm not bearish, but why you wouldn't set a floor in place, I don't know. I think we at least have to latch on, to what some of this rally that we've seen here recently has offered us, and then let the upside run if we do get a chance to see that happen.
Uh, your thoughts here? Why has there been such a disconnect between what we're seeing, you said in the real world in terms of the cash prices versus the board? I mean, is it just a case of funds controlling the futures while, folks out in the countryside are driving the cash prices right now? I mean, why? Because this has been going on for a little while. Why is there such a disconnect right now?
I mean, that's a really good question. I mean, it's at times it's been a disconnect to a much smaller degree, but whenever you're looking at feeders, I mean, if you look at 255, 260 feeders on the board, most people would give anything to buy good feeders there. Now, obviously, if you're talking bulls, heifers, there's a big difference between what you're buying, but a lot of these heifers going to the feeder market, I mean, those guys are still, or gals, are still worth a fortune. And so, huge disconnect. I think a lot of it's probably exactly what you said is that, in the real world, it's someone who's buying these, they're just buying them at the auction. They're buying them off the producer, paying them whatever it takes to get their feedlot full. And then the funds are sitting here trading cattle and trying to manipulate, essentially the direction of the market. And so it's not a market that there's a lot of participation other than the funds. To be quite frank, they control a big part of this market, and so they can certainly push it around.
Matt, how about the Hogs too? Finding some more technical support there. It looked like on Tuesday, some decent gains. I mean, this hog market's been kind of wild as of late. Any thoughts over there?
Yeah, I mean, I do think that hogs, we've seen a tendency over the last several months that, whenever we get some support in some strong markets here with cattle, a lot of times the hogs have kind of followed along. Of course, export sales recently have been awfully strong. And so, with that being the case, I think it's supportive of this hog market. And like you said, technically they look pretty healthy right now. So, the thing that I'd caution a person on is that clearly the hog market makes extreme moves at times. So sometimes, you can be riding along here and get a little bit of a bump in the market and then turn around the next day, be down $2 or $3. So I'd be a little cautious there too. It's not that I want to be bearish, but a lot of times if you're going to be able to take advantage of a good price, I mean, that's what it takes is that you got to step forward and sell some.
Definitely, definitely. All right, Matt, let's close it out today. Final thoughts, anything you'd reiterate to folks here, especially as we work through a thin holiday week and maybe some added volatility, et cetera, et cetera. Just looking across the board. I mean, what do you want folks to think about right now?
Well, I think on the cash side, if you're someone that's got an originator looking for corn and you've got the ability to haul some, I wouldn't be afraid to throw an offer out there. This time of year, a lot of times there's a little bit of a lack of cash movement as far as this corn market's concerned. So at least throw something out there. And then if you've got the ability to haul it, it gives you that opportunity to make a little more than what you thought previously. But I guess I'll just wrap up. You're going to be at our conference there in Nashville, February 2nd and 3rd. And I know a lot of folks have already gotten signed up, but I think our early bird registration ends December the 3rd. So anybody that wants to find out about that or look us up, find out how to get our research, it's just agmarket.net. That'd be a good place to go to find that out.
And that conference lineup is going to be a very good one once again. So find the details, agmarket.net for more. With that, we'll let you go. Matt Bennett, appreciate you joining us. I wish you and yours a happy Thanksgiving. Enjoy that turkey, and we'll talk to you again soon, my friend.
Absolutely, buddy. Have a good one.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.